If we just step back a minute, like we're the biggest state in the country. It's not like we're not talking rare earths here with insurance. Insurance is just companies with capital willing to underwrite risk. There's no
Hmm.
shortage of capital in the world. So what's going on? And what's going on is the way in California's insurance markets have been regulated have made it really hard for insurance companies to come to market. So here's something you were talking about what's going on behind the scenes. Here's something that most people probably don't know. In California, for an insurance company to come to market with any change to product or pricing, they need to file that application with the Department of Insurance and get it reviewed and approved.
Hello, everyone. Rick Albert here with another episode of the Key to the City of Angels. I'm super excited to have Patrick Wolff on the show. Thank you, Patrick, for coming on.
Thanks for having me.
Yeah, so you are running for insurance commissioner for California. Is that right?
That's right. Yep.
Perfect. Okay, so why don't we first go into why are you running and what exactly does the insurance commissioner do?
Yeah, absolutely. No, great way to start. And thank you very much for having me on the podcast. So, look, my campaign is based on a crazy idea that the person who regulates insurance markets should have a background in insurance and
That's
financial
that's
analysis.
that's wild.
Wild, right? Wild.
Totally.
But the thing is, in California, we have been electing politicians for years to this role where absolutely you need to be a champion for the customer 100%, but you also have to have real experience and expertise in insurance, how insurance markets work, how financial markets work more generally, just the nuts and bolts of how insurance operates. Insurance is regulated state by state. Every single state has a Department of Insurance, and every single Department of Insurance has an insurance commissioner. So there's 50, actually 51, including Washington, D.C., 51 insurance commissioners. And we are only one of 11 states that elect the insurance commissioner. Most states appoint this role because it is a
Hmm.
technical role. Now, I want to be clear. I think an election system can work just great, but in order for it to work, you have to have the right candidates running, and the voters really need to be given a choice. They really need to understand who the candidates are and what the qualifications are and so forth. And for years, this race has been really down ballot and it's been, quite frankly, ignored. And what that means is it's been run by insiders. The typical profile of the person who is insurance commissioner is a termed out state legislator looking for something to do next on the way to doing something else. And they clear the field, get the endorsement of the Democratic Party. And look, I'm a Democrat, I'm a lifelong Democrat. I'm saying this as a Democrat, but they get the endorsement of the Democratic Party, get all the insiders, and just walk into the role. That's obviously no way to choose insurance commissioner. But for the first time in over 20 years, the California Democratic Party has not endorsed this time. It's a much
Hmm.
more competitive race. I'm one of a couple candidates running. I am the only serious candidate with real insurance, business, financial experience and expertise. But I think what's really exciting about this campaign, people are paying attention. That old saying, out of crisis comes opportunity, right? Well,
Hmm.
insurance markets are in crisis,
Yeah,
and
for
people
sure.
know that. Yeah, people know that. But because people know that the markets are in crisis, people are paying more attention, and they really want to pick the right person as insurance commissioner. And so I've put myself forward because I think my experience, my expertise, my qualifications really make me the best candidate, and happy to talk more about that and so forth. And most important for everyone listening, I think this is a really important race because we have the opportunity to fix our insurance markets or to break our insurance markets. And I'm the fix it
Mm.
candidate.
Yeah.
So and I really ask folks to pay attention and really think about this because this is a very important role that really determines how how healthy, how well run our insurance markets are. And as folks in LA, of course, have learned, we got a lot of work to do.
That you brought up an interesting point. Like there are always like the certain candidates on the ballot where you're like, I don't know what you do. I'm just going to check a box, whether it's political party. I know people who are like, I'll do a couple of Democrats, a couple of Republicans, keep it balanced. But because insurance has become such a big deal, it'd be interesting to see if people are actually now paying more attention to it, right? Whatever. I got my homeowners insurance, whatever. Now so I have a landlords group where it's mostly people from Southern California. And one of the most common themes is like, my insurance got dropped, my insurance got dropped, my insurance got dropped. So I wouldn't be surprised if now they're like, okay, I need to know who's actually in office, who can actually help us
Yeah.
with this stuff. I can only speak from a consumer standpoint of, okay, there's cancellations, okay, we're stuck with California Fair Plan,
Yep.
where whatever, or there's really too high a barrier, right? They do these inspections, whatever. But I'm kind of curious from your perspective, what are some of the issues that are happening maybe even behind the scenes that might be affecting this, or that we don't even know what's really going on, right? Because we only know from the consumer perspective.
So, one of the things I hear most often, I'm sure you hear this and experience this, is just it's not just the rising price of insurance, it's
Mm-hmm.
even the inability to get. So many people are being forced onto the FAIR plan, which we definitely talk more about. And like, why are we not able to get insurance in California? If we just step back a minute, like, we're the biggest state in the country. It's not like we're not talking rare earths here with insurance. Insurance is just companies with capital willing to underwrite risk, right? There's no
Mm-hmm.
shortage of capital in the world. So, what's going on? And what's going on is the way in California's insurance markets have been regulated have made it really hard for insurance companies to come to market. So here's something you were talking about what's going on behind the scenes. Here's something that most people probably don't know. In California, for an insurance company to come to market with any change to product or pricing, they need to file that application with the Department of Insurance and get it reviewed and approved. So that's what's called a prior approval system. Just means you have to get it approved before you can go to market. And plenty of states have that system. But
Mm-hmm.
the other states that have that system, they on average review and approve an application within 60 days. And California, it's 300 days. And the reason why
Mm-hmm.
and sometimes, by the way, it takes longer than that. An insurance company doesn't know whether its filing is going to be approved. And the reason for that is the Department of Insurance has taken the perspective that its job is to try to figure out what the right price is in every case. So they micromanage every single filing. And that's not the job of the Department of Insurance. The job of the Department of Insurance is to regulate the behavior of insurance companies, to make
Okay.
sure that they behave themselves, they don't do anything wrong, that consumers are empowered, that there's transparency, right? That's why you need that regulation. And then you have to let the insurance companies come to market and foster a robust competitive market with lots of choice, lots of competition, right? And that way you don't have trouble getting insurance. But it's because of the way it's been regulated that people have found so much trouble getting insurance, and so many people have been forced onto the FAIR plan, which is not helping anybody.
I interviewed a few episodes back someone in the insurance world, and he made it clear. We actually don't want to insure every single home because then you're creating this massive risk. But then you bring up a good point. It's okay, but in order to bring people back in, we need to have the competition. We need to have the healthiness of the market. Because I
Yep.
know one of the challenges, and just so you know, I'm a smartass now, I know it all, so feel free to correct me, is there's almost like a cap, right? How much insurance companies can raise their prices. But then the problem is at that point, the
Yep.
numbers just don't work. So are you saying
Right.
eliminate that cap? So more, because like LA can, or California can be a great place to invest, even from an insurance perspective, because of the higher price points, premiums, things like that. Does that sound about right? Or what are you proposing?
Well, Okay, first of all, the way California's regulations work
Okay.
is if you want to get an increase, a premium increase of 7% or higher for consumer
Hmm.
lines of insurance, or 15% or higher for business lines of insurance, that requires a review by the Department of Insurance. So that's just in
Okay.
the regulation. If an insurance company is trying to raise the rates by more than that certain amount, there's this kind of break that's put in that the Department of Insurance needs to review it. Now, that doesn't mean it should take forever. And it also doesn't mean that the Department of Insurance should be trying to figure out what the right price is. It means they should be trying to figure out, is there anything funny going on? Is the filing okay? It's an extra check to make sure that an extra layer of protection to make sure that nothing's gone awry.
Okay.
But you know what you were talking about how like insurance company, and I don't know which company you were talking to, but insurance company said we don't want to insure every single house. What I would say about that is in a healthy insurance market, you have
Hmm.
lots of insurance companies that
Hmm.
are underwriting lots of different customers. And some insurance companies want to take certain risks, and some insurance companies want to take other risks. And no one insurance company wants to take all the risks, right? Because
Right.
you've got to spread your bets out. And some insurance companies are going to underwrite one way and say, we're going to charge you this amount. But another insurance company may say, you know what, we can take that business at less than that amount. That's what a competitive market with lots of insurance companies coming and competing looks like. And I know this from experience because early in my career, from 2001 to 2005, I worked at a major bank where for 4 years my job was to build a home and auto insurance brokerage business. And I
Hmm.
watched this firsthand. We had lots of different insurance companies on the platform. And you'd bring in someone to ask for a quote, and you get lots of different quotes. And there'd be some companies that would cluster in the middle, but you have some companies that would need to charge more, but some companies that would charge less. And this would happen across the board consistently with all these different people that come in. Again, that's the benefit of having a robust, competitive market, which we've not had in California. And that's one of the things that we need to fix. It's one of the most important things we need to fix.
So then how do you fix it? Because I remember reading an article from about State Farm and when they left, and they're like, for every dollar we made in profit, quote unquote profit, they would spend $1.26. So the numbers just didn't
Mhm.
work. Right?
Let's
So like what do you
actually,
propose?
it's good you bring up State Farm because we should talk about the history of State Farm because
Okay.
that's really important for understanding State Farm itself and also understanding what we need to do more broadly.
Okay.
So there were these terrible fires in Northern California in 2017 and 2018. And those fires in those 2 years wiped out more than the cumulative profit of all the home insurance companies from 1991 up to that point in time. So that's how much the losses were. So the insurance companies looked at that and they said, okay, we live in a world of climate change. Change means the future is going to be different than the past. That means we need to underwrite the risk differently. And in particular, we need to underwrite the risk based on what our models are telling us going forward, not based on what historical experience has been. The Department of Insurance did not allow that. The Department of
Hmm.
Insurance in 2018, 2019, 2020 said, nope, you cannot use forward looking models. You can't use your estimates of what you think the risk is. You have to only use the actual historical experience going backwards. And most of the insurance companies said, climate change. Climate is changing. Risk is changing. We can't do that. So they left. State Farm rushed in, and State Farm used it as an opportunity to underwrite a lot of home insurance. By the way, at the same time, because so many insurance companies were leaving the state, that's when the FAIR plan really started expanding.
Hmm.
To have the Department of Insurance, which allowed the market to get really unhealthy, way fewer insurance companies, so you don't get that healthy competition, right? Choice and competition. The FAIR plan's exploding. But meanwhile, State Farm is writing more and more business. State Farm didn't write that business on an economic basis because, again, you got to look forward. You can't accept historical. And so, of course, No one expected the horrible fires of 2025, but they happened. And so State
Sure.
Farm now is on the hook for tons and tons of billions of dollars of losses. So it's true that State Farm is in some financial distress. I would add it's their responsibility, but it's also a function
100%.
of bad regulation, right?
Hmm.
Now, here's a kicker to this story that I'm telling you. While the Department of Insurance allowed State Farm to write all this business, to sell all these insurance policies, they did not make sure that State Farm, the company operating in California, would be backstopped by State Farm, the parent company. So it's a little bit of a tricky nuance, but something for your audience to really understand. It goes to why you really need to know what you're doing as a regulator. The insurance company State Farm in California is a legal subsidiary. In the industry, they call it a sub. And it's basically just a PO box somewhere. It's just a legal structure to isolate the financial exposure of the California company
Hmm.
from the parent company. I would argue that's no good. So State Farm, the California company, got into trouble. Now the parent company is not supporting that sub. And because there's no other insurance companies operating, not no other, but there's such a lack of competition in the state, State Farm is demanding and getting an emergency rate hike to jack up its prices, to take advantage of its market position, to charge its current and future customers for the
Mm.
mistakes it made in the past. And you talk to anybody who's a State Farm customer, I'm sure you know this. I've heard this over and over again. State Farm not treating its customers well because that California company's in distress. So the point I'm making here in this unfolding story is you just had like a whole set of very bad regulatory decisions that allowed the market to get unhealthy, that relied too much on one company. They liked the lower prices they were getting, but those prices didn't reflect economic reality. And the customers are worse off for it because the
Yeah.
ones that now need State Farm to support them are not getting the support that they need. So you really need to have a healthy market with lots of choice and competition, where the insurance companies charge enough to cover their costs and make a reasonable, but never more than a reasonable profit. And then meanwhile, you're holding the insurance companies accountable to make sure that they don't stiff their customers, that they're not in any way taking advantage of the customers once they have them as customers, or not being clear about what their policies cover, or not having their policies cover the right extent of damage, and all the important stuff you need to do with regulation to hold insurance companies accountable. Now, another thing that we could talk about is what we do to lower the fire risk, which is ultimately what we need to lower the cost. But what I'm talking
Sure.
about so far is like at the current level of risk, what we need to do to have a healthy, functioning market with lots of choice and competition where we hold the insurance companies accountable.
And that's really where the government kind of steps in, right? Like their job is to make sure everyone's on the up and then let the market do what
Absolutely.
it's thing. Because if people have choices, then they can decide where to go to. They can decide to change their coverage. I personally, and I'm no
Absolutely.
financial advisor, but I tell myself and a lot of my clients, I'm like, look, maybe you should just do the higher deductible because now you get punished for using your insurance. But at least you have the choice to do that. And then you can then see the prices accordingly.
Absolutely. And in addition to making sure you've got really robust choice and competition and making sure you're holding insurance companies accountable, one of the most important jobs of a regulator is to make sure that the insurance company is able to pay
Mhm.
those claims. It's super important, right?
What
Like,
a
I mean,
concept.
what a concept. But I mean, anybody who's listening who's a customer of these affected areas or knows someone who's a customer, like they can tell you it's terrible to deal with a company that's not following through on its responsibilities. And the regulators allowed this situation to unfold where State Farm, and I don't mean to pick on State Farm so much, but
No, but
State
it's an
Farm
easy
is
one.
one of the companies that's really, yeah, it's a bad situation. We need to do much, much better. And that's why I'm running, because we just need much better regulation to make the markets work for people.
So let's say you get elected. What would you do in the
Yep.
first, what does it do for presidents? What'd you do in the first 100 days? Like, Patrick, what would you do in the first 100 days?
To be perfectly honest, in my first, let's say, 5, 10, 20 days, one
There
thing
you go.
maybe the primary thing I do is I listen to everybody in the Department of Insurance, because I do have views of what we need to do, which I'll lay out, but I think it's also very important to listen to and learn from the people in the trenches, what they've seen, how they're thinking. So I would absolutely do that. But in terms of the policy things I want to do, let me describe a
Yeah,
few
go for
things.
it.
First of all, I was saying before, let me say again, we've got to like really streamline that the filing review process and make it very clear to the insurance companies. Say, look, we're going to tell you what rules you need to follow to file, to make your filings. And you got to follow those rules. You follow those rules, you're going to get a reasonable review and approval
Mm,
so that you have the certainty you need to know that you can come and operate in California. And again, we have a giant market. Insurance
yeah.
companies absolutely want to operate here. That's number one. Number two, one of the things I want to do is I want to make public the data that the Department of Insurance has on how the insurance companies actually behave on their claims. This data
Mm,
exists at the Department of Insurance, but for years, the insurance industry has lobbied to keep that data anonymous at the company level. They don't want people to know who the good and bad actors are. I'm going to change that. I'm going to put that information into the public. Not only will it be available for the public for people to analyze and so forth, but I want the Department of Insurance to publish an easy to understand scorecard so that every time you're shopping, every time you're renewing, you can see for the insurance company you're with and any other insurance company you're considering, what has their behavior been when it comes time to pay their claims, which is such an important part of what makes that insurance policy worthwhile to you. Other
I'm
thing I
sorry,
want
I don't
to
mean to
do,
interrupt, but like I laugh because you bring up such an interesting point. People are like, "Is this a good insurance company?" I don't know. I've never actually had to use them for a claim, so you don't really
oh,
know
Rick,
the
I'm
history
sorry,
of.
you broke up there.
Oh, sorry. Can you hear me
Can you
now?
say again?
Oh, it's just more of you don't know how good an insurance company is until you actually have to use them.
That's right.
And so
That's right.
it's hard to really determine who's a good insurance company. You don't know.
That's right. You need that information. And that's a very, very important thing that the regulator can do. Make that in one of the most important functions of a good regulator is to put information into the market that the market won't necessarily give to you on its own. And so I want to do
Mm,
that. Another really important job of the regulator is to establish standards that every insurance company needs to follow so that you don't get any sort of race to the bottom, that everybody needs to meet the same minimum standards. And one of the things that many people in who are victims of these fires know firsthand is the smoke damage. The damage from the
yeah.
smoke from these fires is something terrible. It's something much worse than what we've seen before. And the Department of Insurance has put together a task force to establish smoke damage standards. However, what we've learned from reporting is that task force has been too heavily influenced by the insurance companies. And one of the things that I intend to do is reestablish that task force in such a way that it is science based and objective, and the insurance companies are not putting their thumb on the scale. Because people need to have clear standards that are objective and science based to make sure that their policies are covering them adequately if they're a victim of one of these fires. So those are there's some other things too. I've got a whole plan on my website, but those are some of the things that I'd like to really focus on.
Yeah. What made you want to run?
I've been very active in state and local politics over the last 10 years. I stepped back from investing for other people in 2017 and really became more of an investor and analyst just for myself. And as I was doing that, I became more and more involved in state and local politics. I found it very fulfilling. And I'm at a point in my life. My wife and I were coming up on 24 years of marriage. Our son is in
Congrats.
college. Thank you very much. Our daughter is a senior at high school. And we're at that point where we're about to become empty nesters. And I thought this was an opportunity that I could really step forward and serve in a way that could really make a big difference. And so I'm excited to do it. And that's why I'm running. But one thing I always want to emphasize is I'm not doing this to launch a political career. I'm not going to run for any other political office after being elected insurance commissioner because I'm really excited by the prospect of stepping forward, fixing our insurance regulation, really making our insurance markets work. I have no delusions of being governor or senator or anything else. I think if I can do this job and really do it right, it will make it, from my perspective, it'll just be the honor of my lifetime. And I would be incredibly proud to do that service. And then I'd just be very happy to step back.
Step back, retire, or you can do speaking gigs, right? That's why some of them do it. But no, that makes a lot of sense. So Patrick, I know as we wrap it up, I really appreciate you coming on. How can people get a hold of you, learn more about your campaign, all that great stuff?
Yeah, thank you very much. So my website is patrickwolff.com, right? Two F's, patrickwolff.com. And we have a contact form there. People can shoot an email. It goes to my campaign email address. And so we will absolutely get anything that people email us there from. And then that's the way to learn more about my campaign. And I'd be very grateful for people to check out my campaign, look at my plans, learn more about what we're doing. And if you really like what I'm doing to support us, either with a contribution or you can sign up to volunteer. But I really feel like this is a tremendous opportunity to make a big difference in an important part of our state's economy and how we govern our state. And this is the election to do it. Again, we can fix it or we can break it. And I'm running to fix it. And I'd love people's support in that effort.
Amazing. I do agree. I think California, we're getting to an inflection point. The real change needs to happen. Otherwise, we're going to get hit hard. Want to keep unlocking the secrets to building real wealth in Los Angeles? Stick around for the next episode. Tap the video on screen to keep watching.